Hello, audience. It's great to have you back on a YouTube channel. Today, we are having an episode on Spotify. We will funnel down to Spotify in this episode, starting to discussing the audio market. And I'm happy to welcome Jeremy Deal. Great to have you here, Jeremy.
Great to be here.
You're currently in Mallorca, so we see your finca or what it is
Yes.
in the background.
Yeah, a little family summer vacation. It's nice to be here.
It's great.
It's always a work. Every holiday is a working holiday in this business.
I hope you will enjoy it a lot as well. And we have Sleep here, Sleepwell Capital. You know him from Twitter. In our episode, he's anonymous. So he will be shown with this nice two animals that are sleeping. How are you, Sleepwell?
Great. Thank you for having us, Tillman. I'm excited for today.
It's great to have you on. I think you both are invested in Spotify. Am I right?
That's correct.
Yes.
So we have done the disclosure with this, and I'm happy to start now with our conversation. Maybe let's start a bit with the whole audio option, because I think to understand Spotify, we have to understand the audio market. And I have a list of things that are happening that are widening the total addressable market of audio and music consumption. So let's brainstorm a bit about them. What are key drivers that increase the market, or that has increased the market over the last 5 to 10 years in your eyes?
Well, I could start by saying, just the introduction of streaming, finding a way, like what Spotify did initially, to resurrect the recorded music industry by finding a way to make streaming and unlimited streams either ad supported or premium subscription, so in a legal way. So that was probably the most significant step that's happened since the invention of the CD.
Yeah, absolutely. And on top of that, you have not only smartphones, but a sort of a proliferation of devices, broadly speaking, where you can listen to music in basically any point in time, and throw on top of that the cherry on the top when it comes to the hardware, which are your AirPods and the ease of just putting headphones on anywhere at any time. And I think it's resulting in just an explosion of audio consumption that we've already seen and stands to grow for a very long time.
Yeah, and I would add to that the cost of data has come down significantly in the last 10 years. And so while maybe 10 years ago, the average household would be a lot more price sensitive to streaming audio, what it would have cost, because of the price has come down so much, it's a lot easier just to stream something in your car and not worry about going over your limit, your monthly data plan. And
what I would like to add, and you already see it in the background, if you studied it a bit, I'm sometimes using my background to illustrate certain topics. You see a collection of headphones I have at home, and it's all this. I'm a bit of an audio nerd, so it's not the natural headphone density you find in the household. But like, I've tried to collect all the headphones I found, or all the headphones I found in my household, and there are plenty of it. You also get your headphones with every device. And the interesting thing is, you also get cableless. This is the cable of this pair of headphones. They're connected with Bluetooth, and like Bluetooth enables so much in hearing audio content. It's so easy. You can do it while you do the washing, the cleaning in your house. You can hear it with high quality. And also, if you think about cars, what has changed there in your eyes?
I think cars is a very interesting place to listen to music and audio in general, because it's still mostly just traditional radio. So when it comes to the opportunity in terms of migrating from, call it a legacy medium to an internet medium, car is basically one of those biggest places to go after. So I think I fully expect sort of that part of the market to to be the last kind of domino that to fall and transition more fully into internet.
Yeah, when you look at OEM, I mean, there's normally third parties that are supplying the hardware that goes into a radio system in a car or an audio system in a car, and a lot of these are built in, and the designs are decided many years or several years at least before the car is produced. So as an example, you might be buying a 2021, I don't know, let's call it Volkswagen, but the design of the audio may have been settled or decided in the bill of materials, 2 or 3 years ago. So there's always this lag, at least there has been traditionally, in a lot of audio systems inside even the newest cars. Most cars today do allow you to connect to the phone, but besides that, it can be difficult to stream, and like Sleep said, you just go right. It's easy to default right to the radio station because there is this process too to connect to the phone when you get in the car. So not every system is designed for just very simple connection to your streaming account.
Does anyone of you own a Sonos or other Bluetooth speakers?
Yeah.
Yes. In the home, yeah. At home, yeah.
Yeah. And I think they are 5 or 10 years ago, they were the first of them delivered. And it's also a new format of playing music and hearing music. And I think what's also quite interesting, how did you buy your Sonos or your headphones? I bought mine D2C, so they were cheaper as in normal retail. That's also something that drives consumption in the long term, like the cost going down there. And what I also find interesting, if you think about paying for streaming services, there's still a huge population where our cash societies still persistent. Sleep, you have the background from Latin America. It's going more and more banked and digital payments, or?
Yeah, I think that's for emerging markets. That's definitely an important factor to consider, and kind of an obstacle when it comes to the adoption. And one reason why in many cases, companies like Spotify partner with the local telecom companies that are already have the user captive and already have some billing established with them. But yeah, that's another additional tailwind in specific to emerging markets as more and more people become either banked through the traditional means or through some of these fintech companies that are also growing a lot in these markets.
Tillman here. I want to invite you to support my work. Below, you can find a link to the thank you page. Just click on it. There you find ways to support me and allow me to produce further great videos like this for my channel. Thank you. And you both studied, I think, TikTok and Peloton as well, while you're researching Spotify and music consumption patterns. What is happening there?
At least from a music or audio perspective, it's just they're just different forms, different avenues, different distribution channels for audio asset owners to be heard. It's another channel, it's another playlist. TikTok, again, these two companies have only looked at from the perspective of audio, and it's obvious with Peloton, you want to get on a list. Maybe listen to a podcast or music while you're working out, but it's just while you're working out. And then TikTok, you can see that when creators or when people put short form videos up, maybe they'll use 10 seconds or 15 seconds of a song in the background, or they'll make a short dance video with a song and with a clip in the background. But where I'm less familiar with is how that actually works is to trigger royalty stream. I know at Spotify, the song has to be streamed for at least 30 seconds to trigger a stream. And so a lot of these clips that I've looked at on TikTok are less than 30 seconds. So maybe it's also an avenue for an artist to get heard. And hopefully, one of their songs goes viral because somebody's watching a TikTok video. There's a recent famous story of a skateboarder guy that kind of, I don't know if he's homeless or almost homeless, or maybe he looks homeless or something, but he rides around Venice Beach and he was holding an old radio, and there was a a song from the 70s. There's like a Fleetwood Mac song playing and it went viral all of a sudden. So a lot of, kids that had never really heard Fleetwood Mac all of a sudden downloaded the song or went to listen to the song, and it was the most listened to song that day or something like that. And I don't know if Fleetwood Mac then gained a bunch of new audience, but new super fans. But it's a way to get your song out there and get played. So I see it as just a different distribution channel.
Do you have something to add, Sleep?
Yeah, exactly. I think those are all, very valid points. I think the only sort of point I want to make clear when it comes to TikTok and Spotify, because they do sometimes get, kind of put together in the same bucket, and some people may even consider them competitors, and we can get more into that a little bit later. But to me, both are extremely good at discovery, right? Like that's really one of their biggest value drivers when it comes to music, and TikTok is well aware of that. Obviously, Jeremy just gave a very good example of that, and there's tons more. So that's a big focus for the industry right now in terms of the impact that social media has and the importance of targeting and putting money and thought behind your social media strategy. But I see them as complementary products. I don't think TikTok is an audio first product in any way, and I don't think anyone would say such a thing. So,
right. I mean, if you are a manufacturer of some kind of food, packaged food, you're going to probably try to sell that packaged food in gas stations. And that gas station doesn't really compete with a Costco or a big like a Walmart. But you probably want your product sold in Walmart, grocery store, and the gas station, and the mid-sized grocery store, and even online. So TikTok is just another channel. It's a very different product. It's not where people go specifically just to consume music, but it's also a place where you'll hear music. You hear audio everywhere. So it's just another distribution outlet for audio asset owners.
Another interesting point that I would see as a tailwind is the creator economy, and also the ability to create that is getting cheaper. You're headed with TikTok, and there are also professional tools that are getting cheaper. Sleep, you have certain insights in the music production. How is it there?
Yeah, absolutely. So I think there's a couple kind of points to make to put what has happened in the past 20 years into perspective, right? If you think about what being an artist was like in the 1990s, I mean, you not only had to go to a recording studio, which was very expensive, and hire musicians, sound engineers, producers, etc. But then you needed to find a way to manufacture these CDs and put them into stores, right? So obviously, all of this has changed meaningfully, and there's also the additional fact that the promotion and marketing part has changed a lot. Nowadays, anyone can basically record their own album on their house by just setting up a home studio, which is not really that expensive, and then you just go and upload your songs to all the streaming platforms via an independent distributor, and you can basically market your songs using social media and things like that. So the roles and the barriers to entry have completely collapsed, which means at the same time there's more competition than ever, right? I think the latest stat we heard from Spotify is there's over 50,000 songs being uploaded daily or something insane like that, and yeah, something like that. So it's millions of artists that are on the platform nowadays, but it also means it's much harder to get heard, right? So there's obviously very different kinds of artists, and some of them may not see themselves as having a full-time job or a career in music, but in general, it's good in terms of being a creator, how easy it's become to pursue your music as a passion or as a career. But at the same time, it's become a lot more competitive. So there's a lot of additional effort and work that you have to put behind it.
Jeremy, you can underwrite this statement that it's getting less and less frictionless. on the podcast sector as well, because I think the reason why we do this interview here is I discovered your podcast where you're talking about advertising and the chances that come up for Spotify. I will link it above. Like, you also started a podcast. How easy was it, or how hard was it?
Oh no, I didn't start a podcast, but I have been on. I've been on a few just as an experiment, and it's a way to maybe talk through different ideas during the pandemic. And yeah, there's on the podcast side, it's I mean that's its own topic. I mean, there's the number of podcasts that are being created. Back to what Sleep was saying. I mean, the number, I think Spotify had 2.5 million or something as of last quarter, but I think this number is going to grow exponentially. There's no cost to produce a podcast within, no material cost. And so you're just going to have anybody that's interested in, or has a voice, or has something to say, or could potentially attract an audience. Going to be there is an explosion in content. It's kind of the golden age of audio creation, and so that will result in some really interesting monetization, some ways to monetize that.
I will show some charts in a few on this. Another point I want to add is that's also my bridge to the music industry, that also, like you already mentioned, Fleetwood Mac, that are songs kind of remastered. You have like Dolby Atmos, for instance, as a technology, or Sony 360. I will link above video where you can hear the difference between the different sound settings, because they offer a more joyful experience if you're listening to music. But with this point, do you have anything to add on the tailwind side? Is there any tailwind we haven't discussed?
The tailwind for audio in general?
Yeah.
Well, I mean, it's not only is just we're just now seeing the number, or just the sheer amount of audio coming to market. The technology to monetize it is also very new, and the way that we're going about monetizing it is very different from the way other types of media have been monetized. And so there's like a double opportunity here that's happening really, really quickly, which is tons of audios coming out. And it makes companies like Spotify valuable because they're an aggregator. But then it's more about what they do with that information, and what is Spotify as a tool then to be used by all this content that's coming up, that's coming to the market. How effective of it as a tool? So not only from a consumer perspective to find what you're looking for, but from the creator perspective to make sure that you can actually at least get positive or negative feedback, and potentially live off what you're doing if you want to do it full time. So there's just so much happening, and we're probably going to get into later. It's somewhat of a forgotten industry. It's an industry in consumer tech and again, these are somewhat borrowed ideas from other podcasts that I can cite, and different research different people I've listened to over the last couple of years of owning Spotify. But it's been an industry and a sector, audio in general, that there hasn't been a lot of venture capital. And I mean, I think people just felt like enabling streaming was sort of the end. And now it's just about trying to grow subscriptions and move away from radio, and moving the ad dollars over from radio to streaming. And that's definitely, that's not right. I mean, we're in the really, really early phases of just, I think, an explosion in audio all around.
Yeah, that's an extremely good point, Jeremy. I think when it comes to, especially my thesis on Spotify and just the music industry and audio in general, I think there's the fact that I have a strong belief that this industry is going to be much bigger than most people imagine. And in many ways, it's very much related to what you mentioned in terms of monetization. And, on average, people listen to something like 4 hours of audio per day. right? Half of that being on radio, which is still yet to migrate over to the internet. And it's billions and billions of people that the market is, that's the market opportunity, right? And then finally, I think the other point to make, which Daniel Egg has talked about this in different points in time, is the monetization gap between music, audio, and the other sort of media forms like, video games, social media. It's orders of magnitude of a difference there to kind of work to close that gap. Probably not completely, because it's still a more passive kind of media consumption type, but I would argue the difference is way too high at the moment. So
that's right, and I put this in my half-year letter that the recorded music industry global value is something like 31 billion, and that's in revenue. And I know that doesn't include maybe all pieces of audio in general, but to think that even after the enablement of streaming, that it's so small, and I cited in there that it's the size of the global banana industry. And podcasting is even worse. But just go back to audio, to Sleep's point. I read a statistic, and I don't know if any of this is how accurate any of these statistics are that are out there, but something like the average human being on Earth consumes 3.8, adult consumes 3.8 hours a day of audio. And that could just be you're in the store and there's music playing and it's subconscious, or you're in an elevator and there's elevator music, or you're actually listening to audio of some kind, including TV or whatnot. But 3.8 hours a day, and you have the recorded side only worth 31 billion, more or less. And that was the former, who put that stat out, was the former economist of Spotify, who has a blog that goes through a process of recalculating what the actual value is versus a lot of the values that are put out there. So, and then I also made the comparison of podcasting ad revenue of somewhere between 800 million and $1 billion for this year, or maybe last year, is the size of like the disposable plastic lighter industry. So if you think about just how much engagement audio has in the average, and how much engagement there is with audio, I think it's very obvious that there's a big gap to be filled here. The addressable market should be much bigger, and will I think be much bigger.
What are your hypotheses or your numbers you estimate this market could be worth or big in 2030, for instance?
I think it's a mistake. So I haven't gone down that. Sleepwell, you may have gone down that path. I haven't thought about it too much because I think that it's just too early to. I just know it's much, 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 much bigger. I don't know how it's going to unfold. And I kind of thought about, if you looked at Microsoft Windows back in the early 90s and tried to come up with the addressable market, or you tried to put your finger on what's the streaming addressable market, what was Netflix addressable market 10 years ago? And all the sell side would say, oh, it's only a few billion, or we'll never have, everything will never transition off of paid TV, cable TV. And it's when it does transition, when these big transitions happen, they just happen so fast and with so much strength that tons of new business models are created on top. And that's where the addressable market just explodes. And that's why it's really, really hard to imagine. I also made the point in my half-year letter that, the e-commerce is still there's still new business models coming out of e-commerce all the time. And I made the point that, Shopify has added something like 100 billion in value just in the last 3 years. And I don't think that was ever a part of anyone's forecast of the addressable market or the kind of outskirts of the addressable market that would be created as a result of e-commerce, even 10 years ago. So it's just big.
Yeah, it's one of those things where you can't really put a number to it, and there's definitely people that have tried, and I've seen numbers thrown around the area of 200, 300 billion in 10 years, or 2030. But to Jeremy's point, a lot of these markets are kind of being created in front of us right now, and there's no there's no really any comparison you can make to it. I like to also make, the Microsoft comparison is a good one, Jeremy. The other one I'd like to go back to is when Google IPO'd, a lot of people thought the opportunity they were going after was the newspaper advertising business. And imagine how wrong you were if that's what you were focusing on, when in fact it was much, much bigger than that. And it was really, a global opportunity that it was also much bigger than anything that existed before, because it was, it's a completely new media format and much more higher kind of ad efficiency and things like that. So I think that's an interesting comparison to make as well.
Yeah, what I do see people try to do is calculate the addressable market of the subscription side of music. So how many subscribers could Spotify have someday? How many Apple subscribers will there be, and how much will they pay? And they multiply that together and discount that and say, well, that's the addressable market. Well, that's completely wrong. I mean, that's kind of almost an opposite thesis of what we're talking about here, as far as understanding what's possible in music and how to think about the addressable market. The fee you pay every month, let's say in 20 years you're paying something like $25 a month for a premium Spotify subscription, and then they say they have 1 billion subscribers or something. That's not really, I mean, that's great that that's happening, but what the opportunity is in the addressable market that comes out of the tools and the models that are built on top of these rails that Spotify has created.
Yeah, it will be a lot of, I think, incremental revenue that will sit on top of that base subscription. When you think about things like monetizing super fans and things of that nature, it's just going to grow the pie much more.
In which part of the inning for switching to digital are we in the audio space?
I mean, it's definitely early. I would probably say the third inning, maybe.
Yeah, I would agree with that. I mean, people are aware of streaming, and I think most people, when I travel to emerging markets, I was just in an emerging market a couple of weeks ago, and I met this little kid I was sitting next to, and I don't know, he was probably 5 or 6, and he was streaming Spotify, and it was Spotify for Kids, and it was on this kind of bigger iPad that was sitting inside of almost looked like a bulletproof case, so it could be thrown across the room, and it was in his language, and I just thought, wow, there's just so the awareness is there, but I would be willing to bet when that kid gets into a random car with his grandma or his aunt or whatever to go somewhere, that there's radio in the car going on, or when he's at school or at the supermarket, it's not unnecessarily always streaming happening. So it's hard to say. People are aware of it, but just haven't fully converted.
Yeah, I mean, if you look at the numbers, there's roughly 440 million subscriptions when it comes to music, and there's 3.5 or so billion smartphones, a number that's probably going to double in the next 10 years. And music is probably the most kind of universal media form, because I mean, it's pretty well known that everybody literally listens to music. Now, what does the end state look like? It's obviously hard to say, but directionally, Daniel Ek has talked about the opportunity left being probably 7, maybe as high as 15 times of where we are now. And it's obviously going to be a combination of subscriptions with ad supported and maybe new formats that we haven't really thought about yet. But it's clearly much bigger than where we are now. So the tailwinds are very strong.
You already mentioned the radio market. How much better can a digital experience be instead of hearing radio?
Well, on demand is on demand. That's just, instead of listening to what they want you to listen to, you're always listening to what you want to listen to. And that's fundamental. And that's probably the fundamental difference. It's the same in with smart TVs and streaming TV content. You don't wait till the new episode starts at 6 p.m. You just kind of watch it when you want. It's the same with audio, and and that's just on the entertainment side. There's another side of this around search and discovery of data inside podcasts, audiobooks, things like that, that'll be layered on top. But just on the music side, I guess in general, it's just on demand. And that kind of experience you just can't replace it.
Yeah, it's vastly superior to whatever linear has been offering for the past, I don't know, 80 years or something. But in many ways, it's similar to what's happening with video, where I think audio is a little bit more, it's a little bit different, and companies like Spotify can make a big difference and have an advantage is when it comes to personalization. And that's another feature that I think on demand is going to be a much better experience than linear, because if you're using a platform that knows you intimately well and knows exactly what you want to listen to at different points in time, it's not only about selecting that specific episode or artist that you want to go to. Sometimes you're just going in and just put on what you think I want to listen to because I trust this platform to know that. And I think that's what they're striving for, really. Right.
The personalization is really important, and I think we're also in the really early innings of understanding how important that is. As more and more content is put out there and produced, whether it's talk or music, the more important that discoverability is. And the winners are going to be the companies, we hope Spotify is that, or one of them, that can build the correct personality profiles on you that continue to build and grow on top. So what in a perfect world we'd love to have happen is Spotify to have those capabilities similar to how you'd think about Google search, but search in audio. And so why is there really no competition for Google search? It's because of their algorithms learn on top of each other. So every time someone uses it, it gets better. And so as people use it, it exponentially gets better. So it's not just somebody tweaking an algorithm in the background. And so the idea is in audio, the more people are using a platform like Spotify, the more the algorithms can learn and grow based on your personality and understand what you might be interested in hearing or researching based on, like Sleep is saying, what time of the day it is for you, what they can tell apparently if you're they have breakup music, so they know if you're broken up or you're at the gym or you're traveling and somebody you've listened to is playing a gig in the town that they see that you're in. So as that grows, it's moving away from just simply streaming, but into the very uniqueness of the search and discovery features that is very much, again, unique to the individual company. So everybody will, TikTok has a discovery feature and a way to grow. I'm sure we'll probably go into this a little further on social and whatnot, but what they do with that information. But they're all different. All these, search and discovery is different in different companies because they are fundamentally really different. So I think these are points of differentiation, if you will. Not to overuse that word, but these are points of differentiation that create they're creating more value at companies like at Spotify in particular because of the personality profiles that I think they're building and focused on, and that will become more and more interesting and relevant as time goes on.
You already mentioned the newspapers. We will see radio stations and radio companies going the same way as the newspaper industry?
I think we will. It's going to take time because, certain habits are very hard to change. And, Jeremy was talking about some of the things that come like pre-built on the car and things of that nature. And obviously it also skews to an older demographic that has basically spent their entire lives listening to radio. So it's not going to happen overnight, but it's definitely going to be, kind of a 10 to 20 year tailwind. It's just going to be grinding along every year and just chugging and taking market share from linear to on demand.
Yeah, and if you look at what happened, there probably will be something that causes it to move forward really, really quickly. Who would have thought that the pandemic would have led to TV streaming, all this content moving from linear to streaming overnight that was not slated originally to be moved over so quickly? You would have, I don't know, HBO had an app, but not 2 years ago, the executives probably never would have thought that it would all just instantly move over. But the pandemic eliminated sports, and so the cord cutting just became just accelerated, and that then accelerated the move of content, of mainstream content over. It forced the hand to move content over, and so now we're in the process of the advertisers now following and trying to play catch up to where the consumers are, where the eyeballs of the consumers are. So there could be something like that, I would imagine, in audio, where it's just a slow move, and then we wake up one day and there's one event or a series of events, and hopefully it's not something like a pandemic, but it could just be the creation or evolution of technology. And what I think it is going to be is something around cracking the social media code in audio. And I think once that happens, which it does feel like we're closer and closer to that than we've ever been. Once that social audio code is cracked, then that could potentially move people much faster away from radio and onto streaming.
Is there any other like this cracking of the code? We already mentioned the newer car generations that are running computers, where you can easily unlock streaming. Are there any other drivers in your mind that are interesting for the radio opportunity to become more digital?
For people just to incentivize people to just stop listening to the radio, you mean?
Yeah, and switch to streaming.
I mean,
I think the advertising part is interesting, right? Because it's probably not as fast as some people would have imagined, but it's obviously a much better ad targeting tool. It's much more efficient. You can measure exactly what your ROI is, or much better than at least traditional radio, and you're targeting the exact people that you want to target. So as more and more of those ad dollars move over to podcasting and streaming audio in general, that probably is an additional driver from linear to on demand.
That's a great point, because once the oxygen is sucked out of that, it's advertising, it's an ad business, so things will change, and those radio companies will probably shrink as ad dollars go away.
And it's going to bring better creators to podcasting as well, as the market gets bigger, naturally, right?
And just from the consumer side, I don't know how many. In an hour of radio, how many minutes what percentage of that hour is you're listening to advertisements? But it's unbearable. I would guess 50% of an hour. I don't know. Do you know how many what percentage of an hour?
I don't know if it's that high, but it's definitely it's definitely like over a quarter.
And the ad loads are much lower in streaming generally, because because of the targeting and
right.
And so it's a better experience. Just that alone, just on the free side, on the freemium side, is superior from an experience from the consumer side. So there's just so many reasons. I cringe when I get it, like in my rental car here. I get into it and there's radio playing, and I just cringe. It's just like I can't. It's just how quickly can I connect my phone? So then again, I've got a big bet on Spotify, so maybe that's the subconscious.
You know what would be music to my ears? If you subscribe to this channel. You can also leave a comment or a like. And there's this bell. You can make it ring if I post a new episode. So please click on it after you have subscribed. And for the ones who listen to the podcast, there's always the chance to write a review. So thank you very much, and make it ring and make some music to my ears. back to the video. Let's move on with a question that came from Twitter over to the music industry and realities. Sleep. There was this question if radio stations have to pay for music playing or music streaming, I would like to say, and why not if they don't have to pay?
Yeah, so I think the question was related to how much radio pays in terms of royalties to the rights holders versus streaming. I think it's important to kind of set the stage here a little bit. I don't want to get too technical here, but when it comes to music, it's obviously a very complex subject, especially on the sort of the legal aspect of it. But broadly speaking, when you think about a song, we're basically talking about two separate copyrights. Okay, you have the composition, which is literally, think about the musical sheet where you have the lyrics and the melodies, and you can give it to a professional musician and they'll just play that exact song that someone wrote, right? That's intellectual property, right? But that's one type of intellectual property. The other one is called the master recording, which is the actual recording that you hear of a song. So when the artist goes into the studio and records that song, there's one version of that goes out and is the one that's being played everywhere on the radio, on Spotify, etc. So those are the two separate IPs, right, that are associated with a song. In the United States, this there's a bunch of history and it's related to this, but for one reason or another, it happens that radio stations only pay the composition royalty, which is also known as publishing. They are arguing, they've always argued that what they are doing is promoting the song, so they shouldn't have to pay the other side of the rights, which are the master. And there's been a lot of battle back and forth on this, and it's been like that forever. In other parts of the world, the radio will pay for both sides of that IP. But in general, radio pays, even those radios that do pay both of those rights, the total payout is much lower than a Spotify would, for example, because they also have non-music related content like talk shows and sports and news and things of that nature. So they've been able to negotiate those lower payouts in large part because not all that they're showing is music related. And you also don't get to pick, which is, when Spotify started kind of negotiating with the labels, their licensing, one of the biggest I guess pushbacks from the labels was that they were, because they were providing such a superior product in terms of you being able to pick exactly what you wanted to listen for, that immense value meant that the rights holders should be getting a much higher payout than they otherwise would if you would just go to a Pandora and put on a station, right? This is known as interactive streaming in, I guess, industry and the legal jargon. But again, there's a lot of complexities to the legal aspects behind all this, but this basically results in Spotify paying out roughly 65% of their revenues out to the rights holders. And again, this includes many intermediaries, and it's both the master recording side as well as the publishing, and you have a bunch of people that are involved in between, the collecting agencies, managers, the labels, the publishers, obviously the artists, but yeah, that's kind of how we got to where we are now and why those two are a little bit different.
Yeah, and I'll just add that there's always confusion around the artist and how much they get of that 65%, or in some, maybe it's 70%, or between 65 and 70. And look, if you're owned by a record label, if you are a famous musician who has sold your master or traded your master for a collaboration with a label, you're owned by the label. The label determines what percentage you get, and I believe it's somewhere around 10% of what they receive, they give to the artist on average. So the artist, if the artist was completely independent and completely detached or unconnected to a label, so it's completely self-published, which probably isn't realistic for a famous up-and-comer or somebody that's really big, but let's just say there was no intermediary involved, you would be getting maybe a 6x payout than what you're getting now. And that's meaningful. So it's not necessarily up to Spotify. Spotify is not determining how much they don't determine how much, for example, U2 gets per stream. That's whoever, I don't know if it's Atlantic Records or whoever, that's who determines it. It's not Daniel Ek saying, oh, okay, I think we can maybe afford to give them a little bit more, a little bit less this year. And so from a streamer's perspective, they're, 70% or whatnot is 65% is, I think that's a fair margin. And I don't see that changing dramatically, but how that plays out, with who gets what within that 65% will probably change over time. But the value is less interesting from an artist's perspective to fight over that. Let's say you kept even all of that, right? Let's just go back to the self-publishing, and let's say in a dream world you were with one of the big labels and you got to keep 100% of your streaming revenue. Well, is that really that interesting? No, not really. What we're really playing for here is an explosion in the addressable market of audio, and connecting with your super fans and building your brand and monetizing your brand in ways that was never possible before. So streaming in a way becomes your CAC, becomes your customer acquisition cost in a strange way. So it's just sort of, okay, great, we have a positive CAC. And that's nice. We don't have to necessarily, we have something that people can hold on to, but it's just a mechanism to start to be able to build and identify your super fans to then go monetize in totally new ways. And I think this is where radio falls short, because once a musician realizes they can make 10x or 20x more than they've ever made before, in the future, with using tools and using the discovery tools, and whether it's advertising, whether it's helping funnel sales of different things that the artist wants to, whatever can be created. I mean, kind of the sky's the limit. It's not just, I think this goes way beyond concerts. The stream is immaterial at that point. Just like, yeah, whatever, we got a check in the mail. I mean, you think about art, like these actors that still get paid a few pennies every time an episode airs of something they did in the mid 90s, and they all add up to something per month. But that's really not necessarily how they're all looking to expand that, to go from making 5 cents per rerun to 30 cents per rerun. I mean, their earning power, if you will, is in their brand and how recognizable they are and how famous they are, and then whatever they can decide to do with that. And I think it's similar with the future of musicians and podcasters, talk radio as well. Is the stream is just, it's how we got started.
So let's move over. You already built the bridge to the music market, and there investors talk a lot about labels. So what functions do the label play for the music industry, and how has it changed over time?
Yeah, so I briefly touched on this when I talked about kind of being an artist 20 years ago versus today, right? There's basically every traditional function that a label would do in the 1990s, you can replicate on your own today in some form or another at very low cost. Now, that doesn't mean at all that the labels have lost their place in the industry. Actually, the way that I like to think about it is, it's one of those kind of first order versus second order thinking, right? The first order way of thinking is, oh wow, it's the easiest time in history to put out music, right? But the consequence of that is that you have thousands and hundreds of thousands of artists nowadays. So you need someone to help you out and stand out, especially if you want to break and kind of be a superstar, right? So that's when the labels really come in. And when you think about the different things that the labels do, some people think that they just give you an advance, so they're capital providers, and that's where their role stops. But I would argue that's probably the least meaningful part of the value that they're adding, because money is a commodity, right? Like if that's all that they were doing, you would just turn around and go to a bank or an investment company and ask them for something similar, right? But obviously they are, well, first of all, they're the experts on kind of calculating these risks that they are taking when they're financing new artists, and it's a very risky endeavor, right? Like I forget exactly what the statistic is, but it's probably 5 to 10% of artists that actually ever become profitable for the labels. All the other ones they lose money on, right? And those more than make up for the rest in a similar way to a venture capital model. But once an artist is signed, there's a lot more things that start taking place after the artist is brought onto the label, right? There's they come in with a project in mind and a collection of songs, call it, but they have to from taking those songs and actually coming up with a finalized commercial product takes a lot of people that are get involved in that. Not only when it comes to going to the studio and producing the songs and the albums, but there's a lot of concept that goes into each artist when it comes to their art, their brand, all the videos that are associated to build their brand. And after these songs or records are put out into the world, the labels just they have the best position to push those songs and get them to the right listeners on a global basis, right? Because if you're an artist, you want to be heard by as many people as you can, and it's really hard to do that if you don't have both enough money to promote your music, but also kind of the logistical and the network of people that is required to be listened to, right? So for example, I could be putting out a song tomorrow, and let's say I live in Miami and I'm sort of going after my fans in Miami, but what if my song happens to be really, really popular in Germany where you are, Tillman, right? So if I'm signed to a label, the label is gonna just call their local office and start pushing for radio time, for playlists. I'm gonna get interviews with the local TV and the newspaper and a blog and things like that. So there's it's a very logistical and there's a ton of work that goes behind a musical project of that nature. And that's only on if you think about it, that's only the sound recording, right? On top of that, you have things like merchandising and touring and all these other sort of revenue streams that are part of the job that are super important. And at the end of the day, most artists just want to be spending time either making music or recording music or playing music. Like they don't want to be, having the headaches of having to deal with lawyers and business managers, and that's not really their focus the majority of the time, right?
Yeah, and I would also add that there's more and more options and more places, more ways to distribute music than ever, like we're hitting on earlier. you're going to have to be on Spotify. You're going to have to be on YouTube. And then you're going to have some strategy to try to get your music attached to different advertisements and different branding or commercials or Peloton. And if you look at kind of the modern music label, which is more like being maybe like a representative or something, or like an agent, like a talent agent, maybe for actors, or even that it's not easy. There's a reason why, I wouldn't know what to do. I mean, let's say I had a band and I know there's all these different ways I could potentially build a fan base, but I wouldn't know where to begin. And so the expertise inside these, whether it's the big label or even the more modern, quote unquote, modern labels like a Believe in France, it's still a lot of work, and there's some economics that are deserved there. Whether it may not be owning of the master, maybe it is, but I think on the low end it's 10% of revenue, but on the high end it's whatever is negotiated. I don't think these 360 deals are being done anymore, but it's quite a lot of work, and what you're seeing a lot of money going into music, rolling out music catalogs and music. And one of the reasons you see even Oaktree is financing there's several bigger private equity funds going into this and rolling up music rights. And it's not just because multiples are high in the market and they're hoping to go public. It's really because there's never been a bigger spread between what people earned in general and what is really possible. And so, you may have an artist who can't tour anymore and they're kind of near the end of their, maybe they have died, or maybe the heirs own it, or maybe they just can't tour anymore and it makes sense to sell for some multiple of revenue. But the reason that somebody else can buy it and make money with it is because they can figure out how to. It's like the early days of the internet. You could figure out how to get on. You could rank on Google. You'd pay somebody to help you rank on Google search. It's kind of like that. Only imagine a Google search situation across, for many different avenues. So it's a very, very rapidly evolving space as far as monetization is concerned. And you're going to need somebody in the middle if you're going to be serious about your work. And I've come around to kind of believe that, there's going to be a different deal for different artists. There's going to be rappers that come out, and they self-publish in the beginning, but they're going to need to hire somebody to help them move along, because you can't build a multi-million euro brand just in your garage. You can get started, and it puts you in a much, much better negotiating position if you already have. If you've already had millions of people listening and loving your music, but you still need help, and it's not just somebody to book your tour. It's more than that. So there's value for even the old labels, but I'm sure that they are pivoting and changing very rapidly internally as well. The old way that they used to make money has evolved. I mean, they're no longer stamping CDs anymore, but that doesn't mean that they are melting ice cubes by any means.
Yeah, it's incredible how they've been able to adapt to all these changes that have taken place, right? I mean, if you think about how devastating it was for the industry in the mid to late 2000s when piracy hit, it's pretty incredible how they were able to kind of navigate through that. I think kind of adding on top of what Jeremy was saying, it's pretty instructive to, just look at the data when it comes to, especially being a superstar, because I think it's important to separate different kinds of artists, and not all artists want to be superstars, right? But if you want to be a superstar, the top 10, top 20, they're all signed to a label. And take a look, for example, at Taylor Swift, who's been one of the most kind of vocal, and she had this whole drama with her masters and her previous label. And like, you would think she's the first artist to kind of just, or like the main artist that you would think that would kind of go out and strike on her own. But she turned around and she signed with Universal. So that already by itself tells you the fact that Universal is adding a lot of value to her career and to her life in general. Now, she obviously got a really good deal. She's going to own her masters, etc. But she's still with a label. Now, going back to that comment I just said in terms of the different kind of aspirations that artists have, the independent market is probably very appropriate for an artist that may not want to be a global superstar, and they just want to kind of do their own thing on their, what they call do-it-yourself, the do-it-yourself route, and maybe have 3 or 4 cities where they have most of their fan bases, and thanks to streaming and touring, they can probably make a decent living out of something like that. And I think that's actually another interesting opportunity for Spotify to kind of give the appropriate tools to those kind of artists in the future.
How important are labels for organizing the production of high quality music and organizing the division of labor in the music production market, and give a certain planability for this?
When you think about superstars, right? Like just pop music in general, and you can broadly expand that to other genres that have basically become very global nowadays, like hip hop and reggaeton and things like that. Again, the top, call it top 50 or whatever, however you want to segregate that. It's the majority of that is signed onto a major label, and it's probably not only related to the quality of the production that these recordings are going through, but much more related to the brand and the capabilities of putting out that record on a global basis, which takes a lot of logistical know-how, network, a lot of money, and there's an image that's always associated with most of these superstars, right? And that image takes also a lot of time, effort, and money to build. Not to mention like how much something like a Dua Lipa tour would cost, right? Like these are very very high budget and complex organizations that take care of things of this nature. So in that part of the market, the labels are very important.
Well, and also as the digital tools grow and explode, you're going to need help. You're going to need more and more help. I mean, I could see a whole team dedicated to a superstar just focused on tools of the top 3 DSPs. Because the sky's the limit on a lot. I mean, just looking at the top 10 or 5 or 10 Spotify tools that exist just today, and those have evolved enormously just in the last year. I can't imagine the combination of things you could do. It's just kind of like whatever you can create, whatever you can dream of. I could see somebody at a label whose idea is to dream up ways to promote XYZ person. And it starts with identifying the superfan and the traits of the superfan, where they are, what other things they listen to, how they listen to it. And let's say they knew, you could find information like, well, this is the demographic of the superfan. Just name a demographic of a person in this part of the world, and they generally listen to it while they're just before they go to bed or just when they're in the gym. You could organize all kinds of promotional tools around those around that knowledge. Whether it's deciding to, I don't know, hey, this is some up and coming artist, and that everybody listens to it at the gym, and now he's gonna, for his super fans, he's gonna talk about like his favorite workout, and then maybe even sing something, or it's gonna be right, hey, maybe we should have her play some music at home and have everybody vote on what they liked. Ask me anything scenarios, and it just goes on. It's whatever you can kind of think of. And so as these tools grow and grow and grow, And there's more things that they're going to say, you know what, I think we could sell, and that Jim, maybe we could sell Jim, maybe this rapper, because right now, you hear about some of the big rappers, they own a stake in Vitamin Water. I forget which rapper owned like a stake in Vitamin Water, and he had like 10 or 20% of Vitamin Water. When it sold to Coke, he made hundreds of millions. And you see these every now and then. These people get involved, but imagine that times 1,000, because there's something that you could be a part of as an artist, a promotional deal that you never would have been able to think of before, because it didn't require you to be the biggest and the best. Or maybe it is for the biggest people, maybe the biggest stars, the superstars. It's instead of just being involved with Vitamin Water, it's involved with 20 or 30 other things that are unrelated and don't compete with each other. So as these ideas snowball and grow, and the tools to become, just to make so much money with your brand, it's all about building the brand equity. Right now, the equity of these brands is just zero. Everybody's focused on the streams. The streams it's just kind of the only thing that's really been there before. But the stream is not what's interesting. The stream is not what that's not really what we're talking about. I think it's as these tools to unlock the industry evolve. I think the hiring profiles at the big music labels will be more tech type people than or ad tech or the types of people that they hire will evolve. But it's kind of like McDonald's becoming healthier over the years. They just adapt to the environment.
So do you see them also in the third or early inning of the transformation to digital, the labels? Or what is your take on the digital state of labels?
I think they're very aware. They're shareholders in Spotify. They were part of they were part of the original group that sat around at a table, as far as I understand it. Sleep, you may have more on this, but the way I've heard the story told is that Daniel Ek, got everybody in a room and they agreed on a deal, and they were all kind of partners in this, which is part of the problem now, decoupling away from these original partners. As far as the original economics. And so that's another topic. But I think that they are very, 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 very aware, because their revenue had gone. I mean, they were willing to try anything, is the way I understand it. I mean, they were getting crushed by pirating, and they said, okay, well, let's give this a shot, and then it worked. So they know what's there. They understand what's happening, and from the interviews we do and conduct with industry people in the industry. They're involved with Spotify, and all the DSPs are really involved with the music labels and meet with them sometimes every day. I mean, they have teams. They have a group at Spotify, the way I understand it, at least, that it just meets with. It's assigned to different people at the different labels, and they just have open communication, and their job is just that. So I would imagine they're very much on the aware of what's happening.
Yeah, I mean,
and the
it's
opportunity.
interesting. I suggest anyone who has an interest on Spotify, the labels, or just the music industry in general, take a look at the presentation that Pershing Square Tontine put out on Universal Music. Obviously, we saw that announcement a couple of weeks ago, and I mean, the whole investment thesis for the company is based off of streaming. So, I mean, that's their biggest selling point, and just going digital in general, right? I think as it stands right now, digital, which includes obviously streaming, ad supported, and things like TikTok, Facebook, Peloton, etc. That's probably around 60% of a label's revenue today, with the remaining 40% being physical sales and things like merchandising and other revenues. They get a little bit from touring, depending on the contracts that they have with certain artists. But the majority of it is already coming from streaming. So and it also happens to be the highest margin business, right? So that's their biggest focus going forward. No question with that.
Here we have the chart of the revenue shares.
Yeah, exactly. So that's the global recorded music, right? And that's 50% of the revenues are basically coming from streaming today. Yep. I think in the States it's actually closer to 80, but you still have, you know, a pretty maybe not fair to call it too significant, but you know, physical has actually leveled off a little bit recently, but you know, it's not such a fast decline as it used to be. And you know, if you look under the hood, actually things like vinyl are growing in double digits, if I recall correctly. And then you have countries like Japan where, and I think actually Germany, Tillman as well, is still very big on physical.
People still buy CDs.
Japan, yeah, yep, I've read
there's
that
some reasons
too.
for this.
I've read that too. So it's look, and there's a lot of things happening. I mean, just zooming out, it's easy to be critical on the labels for being big and slow, but I wrote out a timeline of just some of the Spotify tools that I think I've been interested in just since I've owned the stock since late 2018. Early 2019. And it's only been, I mean, a lot of the stuff that they're doing now is very, very new, and you can't expect full, complete adoption overnight. It's all very cutting edge, and it's all, I think it's important, and it shows the direction of where things are going. But, and it'll be adopted. I think you'll see the music industry, you'll see the big labels adopt more and spend money for these tools, but they're all relatively new, and or they are new. I mean, there always were some kind of promotional tools out there. It started with, really, the first promotional tool was just the playlist, as far as I know. And once that playlist, that recommendation music, that engine was developed, it gave maybe some opportunity to put some music ahead of others. But it's only been recently that the real tools have come about. And I think that's what's growing exponentially, and why I'm excited about the company, because what people don't realize is how fast that's developing. And what we could see is the music industry, I think paying, and rightfully so, to spend more money to grow in different ways that just hasn't happened before, outside of, beyond just streaming.
With the returning growth we see on this chart, I have the feeling that there are also some new battlers opening up in the music industry, and there are some actors coming to the playing field, like Pershing's, where you already mentioned, as investors in music. It haven't been there before. We already mentioned the topic of songwriters versus Spotify versus labels, or musicians versus Spotify versus labels. The percentage of what is going to the musicians is a battlefield. We have the streaming platforms versus labels a bit. What are the power games you're observing, and how would you comment them as part of the new coming growth? And what kind of new actors have come to the playing field music industry?
So I would say, the biggest new actor that we've seen as a result of streaming is what is known as a distributor, right? So you may have heard, actually, Jeremy mentioned one a little bit earlier, which is Believe, that actually just IPO'd in France. Some of the other more popular ones are CD Baby, TuneCore, which is actually owned by Believe, and DistroKid, but there's a lot, right? So this is especially relevant for independent artists, that obviously when you have a song recorded ready for commercial use, you're not going to go out and upload it manually into Spotify, YouTube, Apple Music, because there's hundreds of these called DSPs, right? And as an artist, you need maximum exposure. So what you do is you hire a distributor, also known as an aggregator, and you pay them somewhere around 10% of your revenues, and they basically take care of putting out your music in all the relevant channels, the digital channels, and they also help you with collecting the royalties, etc. So that's the biggest sort of new player that we've seen as a result of streaming. And again, it's much more related to the independent part of the market, which is anywhere from a quarter to Yeah, around a quarter of the market, with the other 3/4 being part of the labels.
And just social media in general. I think the social piece of music is really early and may not be necessarily an obvious new player, but anyone that can. I think as soon as the wheel starts turning on music becoming more social, and we can talk about that. Just audio in general becoming more social. That audio code and cracking that audio code. There's going to be new players, and there's going to be existing players that become much more important, and there's probably going to be others that are less important. So social and finding a way, these anybody that can find new ways to help build a brand of an artist are going to increase in value and become more important. And those that don't reduce those frictions will become less important.
So as a closing question for the music and the labels part, before moving on to podcasts as the next audio opportunity, please give a yes or no answer to the questions. Are the labels becoming replaceable? Hey, Tillman here. I'm sure you're curious about the answer to this question, but this answer is exclusive to the members of my community, Good Investing Plus. Good Investing Plus is a place where we help each other to get better as investors day by day. If you are an ambitious, long-term oriented investor that likes to share, please apply for Good Investing Plus. Just go to good-investing.net/plus. You can also find this link in the show notes. I'm waiting for your application. And without further ado, let's go back to the conversation. So let's move away from music to the podcast market. As you can see here, I brought some graphics. Here you can see the growth of the podcast audience. It's estimated to grow 20% CAGR over the next years, and they guess it would double 2023. The next graphic is the unique podcast account by year. We already mentioned this, that there's so much new podcasts on Spotify that are growing, and the podcast producer market is widening. We see the podcast market growing strongly. But I think also from my experience as a creator myself, there are still many hurdles in the creation and the growth of podcasts. What do you think should be done on the producer side, or what innovations will unlock even more growth, and what does help or has held some producers back to produce podcasts as well?
I think when it comes to the hurdles that I think especially Spotify is focusing on solving the next couple of years, and should be a very big enabler for the market in general. One is discoverability, because podcasts still suffer from not finding the right audience, and you kind of just need to promote it on social media and things like that. But it's still not, you don't have the same tools as you would if you're a musician, and kind of just aiming to get on a certain playlist and having the algorithm recommend you a song based off what you listen to. I think that's kind of the next frontier when it comes to podcasting on one side, and the other part is monetization, right? Because the better and the easier that it gets to monetize your podcast as a creator, it's going to be not only better for the creators, but it's going to bring in more creators, and almost a more kind of professional and high budget produced content, right? So it's going to be better for everyone, in my opinion. And this is both advertising, subscriptions, different. It's all being tested out as we speak, because it's such a new market, right? I don't know what you want to add to that, Jeremy.
I don't think we understand just how far behind audio is, or talk audio is, podcasting is. I mean, it's there's some really interesting statistics out there but just to zoom out a minute and think about how hard it would be with this podcast. So this interview we're doing, let's say it's an hour and a half or something, or 2 hours in total. And yeah, I could post it on Instagram, but what percentage of people are going to listen to it? And if they did click on it, how many people would actually listen to the full? I mean, I guess if you were really into this and you were doing research on Spotify and whatever, but it's more likely that the people that are listening to it will come at it from a different way. So the tools that allow social media to grow and to have grown so exponentially just don't really apply to audio in general, but especially to podcasts, because podcasts are so specific. They're so long. They're so specific to kind of what you're interested in. And there's just so many podcasts coming out every day. I had a couple of notes from an interesting, I listened to the Doug Embrace interview from the founder of Pods, which was recently acquired by Spotify, on the Not Boring podcast, which I recommend. But you know, one of the stats that they talked about was that the average podcast, or the median podcast, is downloaded only 123 times, and I guarantee that will go down as the number of podcasts go up or are put out into the system. So, you know, finding a way to bring audio into the modern era of discoverability and searchability is really the real opportunity for Spotify. So it's not just in talk, but also in music as well. But on the podcast side, as Gustav Soderstrom, the chief technology officer of Spotify, has talked about, it's easier for them to experiment with these tools in podcasting, because you know they have complete control over that, versus the labels are harder to work with and slower to move, because they don't want to disintermediate their own cash flows like this moment. So the opportunity to socialize, or to move, to make podcasts discoverable and people actually listen to them is really interesting challenge. And the Pods acquisition is an example of, I think, where that industry is going and what the opportunity really is there. Because so again, social media is designed for print. It's designed for pictures and posts and blogs, and look at what do people post on Facebook, what do people post on Instagram or Twitter. It's just different for audio is inherently difficult socially, and Daniel Ek talks about this, and then there's other people as well. But I think the path they're going down to fix this, or to unlock this opportunity, is with, I think, what Pods is doing, and that interview with Doug and Bruce is really fascinating. I think there's a variety of ways they're going about it. One of the Pods itself, and I've played around with it just a little, but Pods builds a social profile on you, very similar to what Spotify does on the music side. And it uses machine learning to pull out snippets, little pieces, maybe one or two sentences that are really the kind of the heart of a podcast or something interesting. And then it builds a cohort of those and collects and puts those together. So when somebody searches a topic on Pods, and the example in the interview they gave was COVID, it could potentially produce one or two lines of talk from 5 or 6 podcasts from really credible people that have been given in the last 6 months, and actually create it's a way for those creators to be heard, and it's something, it creates a short form version of something that was really long and tedious and difficult. Because right now, for example, if you want to research, I generally, in stock research, I rely on podcasting quite a bit, and sometimes there'll be a keyword in a company I'm researching, and I know that there's a podcast, but I got to listen to the podcast for an hour, and I don't want to listen to it. I keep hitting the forward button. I'm like, I just want to hear what this random person has to say about this stock. and maybe the podcast is on something totally different. So if I could, pull out that one key piece that I'm interested in, and have that packaged with similar data and sent and given to me, just like a Google search, it's a way for creators to be discovered, and allows it's an area that it's kind of the way they're I think their path forward today, but I think there's going to be more tools like this, especially with live audio.
RSS is still a big thing in podcasts. Why is that bad?
Yeah, so RSS, I think, was basically designed in the 90s, right? It's just something that kind of it's a directory, right? And it pushes whether it's an email or in the case of a podcast, it's just the MP3, and you just kind of automatically download that. But besides that, you have no real traceability or engagement metrics that tell you whether the person is going to listen to the podcast or not. And forget about monetization as well, because the only supported advertising format would be the creator just reading out whatever brand they're partnering with. And again, you can't really measure if that listener listened to that part or not. So when Spotify decided to get into podcasting, it was a little bit controversial in the beginning, because they obviously embraced their streaming nature, which they were built on top of that, and they're very true to that, right? In large part because you would be able to get these metrics, and now more recently we've seen that you have the capabilities of dynamically inserting advertising that can be targeted to the specific listener, right? And they've in the beginning, the reason they were criticized a lot was because in many ways it was considered like a closed-end ecosystem for podcasting. But I think more recently that they have announced this this more open-ended platform through the use of Anchor, which is the podcasting hosting company that Spotify bought. They've actually proven that they're going to be much more creator friendly than otherwise some people would have thought. I've found it pretty fascinating that I've been reading Ben Thompson for a couple of years now, and originally he was a big critic of Spotify's stance on podcasting, to the extent that he ended up pulling all his podcasts from the platform. But once Spotify came back and announced their intention to be more creator friendly and open-ended, and this audience network, and not really taking a lot from creators, especially compared to Apple, he basically completely did a complete 180 and brought all his podcasts back to Spotify and recognized that they were doing the right thing. I thought that was super interesting.
And I'll just, I could just add to that the typical walled garden model that social media is kind of the opposite direction that Spotify is going now. So the walled garden model is, hey, you post your content on Facebook, you don't get anything for it, and Facebook just makes money from it. And the idea, and it's a one-way monetization. And Spotify looked up and said, okay, we want to create this platform that's different from RSS, because the way I understand it is RSS wasn't possible in streaming, and I don't understand the technical reason for it. Or maybe it wasn't possible for them or all of streaming. I'm not sure. But this open access platform allows a podcast owner, even a large. So, for example, the example that was recently talked about in a podcast with Gustav on the Means of Creation podcast. If listeners haven't, they should listen to that. It allows even the large content owners like the New York Times or something like that to post their content on Spotify and decide if they want to use their billing platform or not. But if they already have, like Ben Thompson, if they already have a subscriber base and they already have a billing base, it allows them to put that on there and not necessarily have to, and be able to have complete control over that. So with Apple Podcasts, you do not have access to your user base. So if you're trying to build a subscriber base, you can't get their emails, for example. You can't interact with your users directly, and you have to use their billing system. And so if you have an existing podcast with, 1 million followers or 1 million paid subscribers, you can't move it to Apple because, and before you couldn't move it to Spotify either. And I think that was Ben Thompson's problem with it, because in order to move it, you would have to ask all of your subscribers to unsubscribe and resubscribe them all over again to Anchor. And so now in the open access platform protocol, it allows you to move your material over to Spotify, and if you don't want to use their billing system, you don't have to. You can continue using it, and it also allows you to decide if you want to monetize on their ad insertion streaming technology or not. You can use your own. But what Spotify gets out of it is they could just get access to the data. They want all audio available on Spotify, which makes perfect sense. And as Gustav, the chief technology officer, says, there's no way we can have all audio on the platform if we have to monetize all the audio, because inherently a lot of people say, no, we don't want Spotify to monetize it. We want full control. We want to monetize it. That's why Apple doesn't have access to a lot of audio, because Apple highly, highly controls the way it's monetized, and it doesn't allow you to have the interaction with the subscriber. So this is Spotify going the complete opposite direction, saying we don't want to be a walled garden. We want to build products that are inviting, that makes the podcast owner want to be on Spotify, and then choose if they want to monetize with Spotify or not. But either way, we want to make sure they're on the platform. And so it basically gives you zero excuse to not be on Spotify. Even a competing podcast company would have no choice but there's no downside to allowing Spotify to distribute your product. I mean, they're in 178 countries, and you can upload on Spotify, and you could continue monetizing yourself and have nothing to do with Spotify. But Spotify also wins because the person in whatever country everything's available in one player. So actually, ultimately, Spotify really is winning slowly in the background of even when the creator is choosing not to monetize on Spotify. So the open access platform is a really big deal because it allows, it creates kind of a no excuse situation for everybody, including the large podcasts, even competitors, to move over onto Spotify and allow Spotify to be one of however many distributors. And then their bet is that they'll be able to help make you a lot more money if you choose to partner with them on ad insertion, because now they've got so much more content and so many more subscribers. It doesn't mean you can't monetize on other platforms as well, but they are really in the lead, and they're really, I can't really think of anybody else, maybe YouTube, that could afford to do that and just say, sure, come on for free, and you have completely control over it, and you can take it off like this. You can remove it from the system too if you want tomorrow, and you don't have to use our billing system, and you're not tethered to us in any way. I mean, that's in exchange for that, they just want to see the data flow of who's moving in and out of there. So if you choose to, and I think some sales rep will probably call and say, look, I see you're probably only making so much money here. We can probably increase that if you use our ad insertion technology. So it's brand new, but it's again, it's one step towards being very, very creator friendly and just kind of bringing these podcasts to the platform. Now, the monetization of it is a different thing, and one of the monetization tools would be like a pods that we talked about earlier, where it uses machine learning to snidbit, to cut just in the little pieces the podcast and get it out there and market it. Maybe it's a campaign in Green Room around live, where the creator hosts something special or charges for a unique event with the super fans, et cetera, et cetera, et cetera. But anyway, not to go in too much, but I'm also really excited about the move to the open platform and away from the walled garden model that most big social platforms rely on as their moat.
It's quite fascinating how your answers feel if differently compared to the music industry. In the music industry, we're more talking about the kind of old town that was run down or that was invested in for a certain while and that now gets revived, and there are new investments in it. And here in the podcast space, it seems like a very small playing field with some settlements already set, but everything is still in the making and dynamic. That's quite interesting. Let's also look at the side for advertisers. How easy is it for advertisers to advertise in podcasts, and where there might be a blockade for further growth or a hurdle for further growth?
Yeah, so, it's still, in large part, podcasting is still a very small market because not many advertisers have decided to go and serve ads in that medium. I think, generally speaking, the advertising industry is not known to be, like a dynamic and fast moving industry that's just gonna, jump on board of a new consumption format that's just taking place. And Spotify themselves have gone through different sort of iterations in terms of what the best way is to serve an ad. So we're still in the very early stages of this advertising opportunity. In my opinion, I thought it was interesting. I was reading a transcript of an expert call from like an advertising executive, and he said basically what I just told you guys, but he gave out the example of taking an advertising that we currently have on radio and putting it on podcast it makes absolutely no sense. Like it's not as simple as you would think. There's a lot more that goes to it. So I think in large part it comes to the advertisers realizing that podcasting is an engaging and superior advertising medium, and also having enough inventory as it relates to the brands that decide to advertise on it, and then you also have things like the self-serve ad studio, where it's more similar to what a Facebook would offer you, where to just go and put a marketing budget and kind of just upload your content, your advertising content to be served as inventory. So again, a lot of changes are gonna be taking place, but I think it's a very, very large potential for both Spotify and the industry in general. Spotify's management has estimated that advertising could eventually become anywhere from 20 to 40% of their revenues. Right now, it's probably around 10, if not somewhere below that. But it speaks to what they've been focusing on and the potential that they're seeing in this market.
Yeah, and most of that revenue now is advertising revenues on the music side, which is really just part of a funnel to the premium. I'll just add to that. One of the reasons that a lot of the radio advertising doesn't translate over is because the CPMs are so much higher in podcasting, because of the targeting and the measurement is just so much more superior. And you've seen that in the transition from linear television advertising over to streaming. The streaming, an ad on Roku may have maybe 10 or sometimes 50x the cost of some of the really low cost ads on late night TV that just run. And part of that is it's hard to charge. We'll put it this way: it's easier to charge a massive premium if you can buy very specific data and tie that to something. I mean, there are faults in podcasting attribution right now because, and it's getting better. We interviewed a guy from a company called Podsights, which is one of the attribution monitors for Spotify, the third-party companies that monitors the I guess the attribution of their podcast advertising, and helps them measurement and verify the measurement as a third party, almost like an accounting type of relationship. But there's some technical hurdles, and I'm not. It's hard. I don't recall all of them, or can't really fully explain all of them. But they have to do with the targeting of where somebody is all the time. I mean, when they're listening, because if you're listening, depending on where you're listening and how you're listening, it changes the ability for the advertiser, or for a Spotify, for example, or even an Apple to target, to understand exactly who's on the other end. There are some cases where they can, where it's clear, and then in other cases it's less clear. So, with cookies kind of going away and IDFA and whatnot, I mean, there's a benefit to a company like Spotify, because what happens is they can use data across their entire system. So you can buy an audience, and that audience data comes from one of the reasons that music and podcasts and then audiobooks will all be on the same platform is because you can buy an audience based on music habits, for a podcast based on music habits, for example. So they can decide, like, okay, this guy listens to this type of music at this time, and then these are the couple of podcasts he's listened to or she's listened to. And it just makes it easier to build a profile on that person when you can see all of their audio habits, not just podcasting. So it does give, it is creating a lot of value for a company, for a company like Spotify with that amount, with that size of that reach. But there's no real retargeting. So there's some limitations, but at the same time, it's just an enormous opportunity because of the engagement. But the engagement causes a much higher CPM, which causes advertisers initially to say, wait, I'm used to spending a local dealership $500 a month on the radio station. I'm not going to spend, but that same reach may cost 10 to 20x that on a podcast. So it's going to take time. They don't just move overnight. So it comes down to maybe waiting for the consumer to fully move. And then all of a sudden that $500 option on the radio ad for the sale at the local dealership is just, maybe it just fades away. Or maybe that car dealership, comes up with 10,000 instead of 500 to do an advertisement. I don't know how that shakes out, but the high CPM is justified, and that's part of the reason it's a little slower. And then there's the programmatic piece, which Sleep, you were talking about. I feel like I don't know, but it seems like it's really new for Spotify to have a really cutting edge programmatic interface with a lot of the third party media distribution companies that businesses rely on for their media buying.
Yeah, I would just add, because it's a question that I've heard and have been asked multiple times as it relates to Spotify's business and the advertising opportunity. When it comes to the margins and the revenue share for subscription and advertising, these are basically separate businesses. So if you're a premium subscriber and you say pay $10 a month and you listen to 50% of the time you're listening to music, and the other 50% of the time you're listening to a podcast, 100% of that premium, the premium price that you're paying is still going to the labels. Okay, that's not being separated out to the podcasters because of the label agreements. The interesting part is that on the advertising side, that's where this has been separated and agreed upon with the labels to have the podcasting side segregated. So obviously any advertising that takes place through a podcast is going to be shared obviously between just Spotify and the podcaster and the creator, right? So it's a higher margin opportunity as well.
Yeah, incentives matter, and that's the more people, the more content that's on every day that goes by, there's more and more content uploaded to the platform on the podcast side and the music side. Even if the subscriber base slows and is half the growth that it has been, it doesn't really matter. It's really, I think one of the KPIs that I get asked about that I think is less important is just that the subscriber growth rate is not as important as I think and when thinking about monetization potential longer term, I think about the amount of content becomes more important, because the faster the content can grow, the more opportunity there is to be able to build a profile on that person and to monetize that content, because those eyeballs become more and more valuable the more content there is. And so there is a real incentive for both Spotify and the content creator to not only put the assets on, or put the content on Spotify, but to potentially, to monetize and to sell ads against it, because it's a high margin business for both sides. And arguably, the more data that's on Spotify and the better their algorithms can get, the higher the return you're going to get as a content owner by sharing that with them versus other outlets is probably, could potentially be a lot better. But it's going to be different. Each DSP will have a different rate and a different potential. But the cards are set up for the cards are set for it to be very attractive for both sides to sell advertising against. And I could see that growth just being phenomenal, and at some point very, very high margin for Spotify. And that's where I think their longer term one of the biggest opportunities for their gross margin profile.
Yeah. It's not a coincidence that they raised their gross margin long-term guidance from 30 to 35% prior to shifting to a broad audio strategy. To once that happened, they took it from 30 to 40% more recently on the Stream On event. I think in large part related to that.
And sleep several years ago, wasn't it as low as 11%? I mean, it's zooming out. I think it's really phenomenal how their gross margin profile has changed over the years.
Yeah. There was a big step change before the IPO, because they were able to agree better terms prior to them becoming public with the labels. I think that's another topic for later on, whether that relationship and the future of those payouts. But I think they'll find ways to increase that, not necessarily by hurting the labels and artists, but by just incrementally growing the pie through higher margin revenues. That's what sit on top of that.
Right, the Spotify for Artists tools. And so back to the podcasting stuff, they can experiment and create opportunities and create new markets for podcast, whether it's simply selling advertising, which is kind of
well, they have subscriptions now.
Subscriptions, well. Exactly. You can allow as a podcast owner to have, just to earn like a monthly fee, like the Ben Thompson example. But I think there'll be more and more, promotional stuff. There's a lot of, you'll be able to pay Spotify to connect the dots and build an audience and discover the audience, and you'll be able to buy an audience essentially and pay them to interact with that audience, and whether it's live or whether it's events or whether it's I heard somebody talking about there was a podcaster that a lady that held her own masterclass, and so she used one of the live tools to host a masterclass and charged what she said was equal to what she would earn in a whole year with her Substack. So I think there's going to be all kinds of ways that people will, all kinds of business models will be formed on top of this, and it's pretty exciting. That's also, it all feeds into the margin model. There's not a lot of really big tech businesses that you've seen expand their margins from potential, I guess, when they hit their target of 4x in less than 10 years. And generally, it's the opposite. They start really high. Gross margins are sometimes in the mid 90s, and then as time goes on, they just go down, down, down. And it's a little bit the opposite at Spotify, which makes it unique.
let's go into these details in the next episode.
Okay.
Maybe I can also add an anecdote on the way advertising is done in podcasts and formats like this. I have the comparison between YouTube and Spotify. So if someone wants to come in a podcast, he mostly has to approach the producer directly and get in touch with them. So you have the problem, you have to get to a certain scale to be interesting for certain people who want to do advertising, and also the process of advertised placement, pricing, whatever is a process with a lot of friction. You have to do personal negotiations and stuff like this. And in YouTube, for instance, you can directly go there and say, I want to do advertising in the finance segment, and people who are interested in stocks. It's not that detailed that you can say, I want to go into a certain format, but in a general field, you can be easily placed. And I think this is still missing in the podcast space. So there's a lot of friction on the advertiser side.
Oh yeah, absolutely. No, you're going to be able to buy audiences, and again, it hasn't evolved as fast as I wanted it to, but it's evolving. I mean, you're going to be able to buy audiences, and there's small podcasts that could look up and receive a check in the mail that was bigger than they ever thought for a month because there was a very high CPM ad shown in their podcast because the topic they happened to cover happened to do with, was related to a big brand that wanted to buy that specific audience. So I think going forward, it's just going to be about filtering the content to make sure it's not completely worthless. And I think you'll be able to reach in and just buy an audience, and it doesn't really matter. I mean, it doesn't matter how big the podcast is or how many followers the podcast has necessarily, but from a pure advertising perspective, as time goes on, I think it'll matter less and less, how many followers you have necessarily. Just on the pure advertising role, there'll probably be a lot of other ways to make money, if you want to build your brand and build a podcast. But just on the pure advertising side, I think there'll be a point where they can reach me or they can reach you listening regardless of what you're listening to. That's my point.
Maybe let's take a look as one of the last points in the audiobook space. We see also growth there. I will show a chart to this. What other trends do you see in the audiobook space? Why is it interesting considering the whole audio opportunity?
Well, in terms of just the format, obviously it's a very highly engaged audience. So, and it's such a natural fit to what Spotify is doing already that it makes perfect sense for them to, find their place in that vertical, right? I think the first big indication that we've seen recently on that was the partnership that they announced with Storytel, which is an audiobook company. I think they have over 500,000 audiobooks or so. I think it's going to take time and considerable effort to build that catalog, because in some ways it's kind of similar to the label relationship, because I think you have 3 or 4 big publishers that control most of the market, and you're going to have to work out if they're serious on that, they're going to have to work out a deal with these large book publishers, and to bring over some of that catalog to the platform and have it monetized in a certain way. Because again, one of the obstacles is that they're not going to be able to take any share from that $10 a month that you're paying essentially to the labels and artists, right? So it's either going to be advertising or a separate subscription. But we know they're looking at it. I think another interesting way to think about it, and Spotify's management has framed it this way before, is that it's not entirely fair to separate audiobooks from podcasts, because in many ways the lines between them are blurring. If you think about a mystery novel, how is that different from like a crime or a mystery podcast? Like if anything, the podcast might be even better because it has more sound effects, it's more engaging. You have someone speaking to you that's not maybe with a very monotone. So in some ways, the podcast for some things might be a much better way to consume that specific content. But again, it's a very early and nascent market. So I think you have to try and attack every single part of it and see kind of what sticks, right? What do you think, Jeremy?
Yeah, same. I think they're experimenting with it. They're starting with a small audiobook company in Sweden. And the big vision is all audio available on the platform. And I think they're probably, if I had to guess, they probably are doing a similar deal with Storytel that they would like to do with the New York Times or any major publisher of content, and just say, look, put your stuff on the platform. And the details of how they're probably going to experiment with different ways to make money and different ways to monetize. And then because it's bundled together with podcasts and music, which is also very important. Like you said, there really is no really differentiation. But there's going to be benefits, because if you're going to Spotify for your audiobooks, your podcasts, and your music, and it's also like a browser, so to speak, and a search engine for audio. So it's not just a place where music is, or where these books and podcasts are siloed, but actually a place that creates massive discovery of your podcast, and or enables you to make money from advertising that would not be possible otherwise, because it's drawing data from listening habits of you're buying an audience that is maybe not really relevant to your podcast, or that's much bigger than your podcast. Then they'll probably experiment with different ways. But what I don't know is it's not really clear how the collaboration will be, if you'll actually have to kind of have a separate subscription, because I don't know how Storytel will expect to be compensated. Maybe it's advertising. Maybe it's an ad-based thing that feeds into the freemium model. I could see that. I mean, maybe the perfect world, they take a risk where they say, look, we're going to, Spotify will do a dynamic ad insertion and sell ads. They'll get a cut of that. And then at some point that'll feed into a premium. And that somehow is a part of your subscription, your premium subscription, and that is an excuse to raise the price of the premium subscription by €1 a month or something. So I'm not sure how it's ultimately going to play out, but I think it's smart what they're doing. I think it's smart that they started with the open access platform, announcing that, and then bringing on audio or the audiobook stuff as just basically another segment or another group of audio assets onto the platform, and like I said, starting probably with the advertising component to it, and then just going from there. I'm not sure how these I'm not sure how their business is structured, whether they actually own all the assets themselves, like a major, like a music label, or if they're just kind of a gateway to these small owners of book owners that, you and I write a book and pay somebody to read it, and all of a sudden it's an audio book. I'm not sure. I haven't looked into that. Have you?
Yeah, I'm not sure either, actually, but it would be interesting to get a grasp on that. I mean, Amazon basically did that with their Kindle and Audible and stuff like that. So maybe they try to replicate some of that and then offer a separate subscription as well. Who knows? Yeah,
I think the most important is, get on the platform and be available to everybody. And my guess would be it's going to be available for everybody, even on the freemium side, which, if that's the case, it's going to be a breakthrough. It'll be kind of them.
Yeah. And it's their model, right? So, and there's just so many different verticals besides, it's not only audiobooks, right? I talk about meditation and like well-being as being another one that I think they should go after as well. It's such a big part of and it's true audio. Like when you think about people using things like Headspace and Calm, like that's an audio app, right? And then you have other things like education, where people are willing to spend a lot of money on the right, listening to the right teacher and having the right course and things like that. So, it's what you were saying, Jeremy, right? They're trying to be this one place for everything audio related, and just be the browser or the Google and I know there's more and more seeing themselves as that player in the market, right? And nobody else is really going after it the way that they are.
With the last question, I want to shift to the perspective of the creators and the creator economy. And if you think about the big circles we had, or the big waves in the creator economy, you had the blogs and the Substacks. That space is already quite taken. You have video, which is mostly YouTube in the creator economy. And is the audio space the last place that isn't fully taken and isn't fully settled in your eyes?
It seems like a big open ocean, the last open ocean. And again, the Doug and Bruce interview from Pods, he really goes into this, and it hit home for me. One of his interviews where he basically just said he can't believe that even venture capital was so slow and to invest in the space, and people just kind of left audio for dead. And one day, like he says, one day it isn't. I mean, it is. It's a big open ocean until one day it isn't. And I'm sure I'm missaying what he said, but yeah, it seems like an enormous opportunity because social media it was not built for audio. In the way that audio needs to be consumed. It's not built for consuming full-length audio. So until that code is cracked, so to speak, I think there's an enormous opportunity because like we talked about at the beginning, the TAM is just so small for something that is consumed between 2 and 4 hours a day by every human. And not that everybody will be monetized, but you ask yourself, like, what is a language worth? I mean, what is the Spanish language worth? Well, I mean, in a world where you could never monetize it, nothing, I guess, technically, but it's actually very, very valuable. In a world where you could figure out a way to monetize it that was beneficial to everybody, all of a sudden it's maybe extremely valuable. So, I think it's an enormous opportunity because it's been an afterthought. And people like the founder of Clubhouse, I forgot his name, have made strides in kind of trying to unlock this. And there's been some recent attempts that are now fueling into what Spotify is doing, new features. But yeah, I think the sector is just so underappreciated. It's incredible to me that the biggest player and Spotify, the biggest player in the industry and the most respected DSP, the inventor of the streamer, essentially the group on the cutting edge of unlocking this stuff is still such a small company. And it's because the industry is still small relative to how much engagement there is on average. And you tell me one other medium where there's so much engagement and such low revenue. I mean, if you had the ARPU per person, per music consumer or audio consumer is just, I mean, I don't know what it would actually be if you divided the total number of people divided by the hours they listen to a day, divided by how much money that equates. If you consider the record industry is worth how many, 30 billion, between 25 and 30 billion, and podcast ads are only worth, 800 to $1 billion. I mean, you're talking about a fraction of a penny in ARPU per person. That's an enormous opportunity.
Yeah, I think I ran the numbers on that once and came at a 16 cents per hour when it comes to Spotify. Something like that.
That they're monetizing at, or?
Yeah, like that's how much Spotify costs per hour.
Oh, that's what the consumer...
Yeah, exactly. But then if you increase, obviously you increase engagement on that and whatever, and it becomes even lower, because that's assuming that people spend a little bit less than an hour per day. I think was the number I was using, but
they do spend a lot more than an hour a day, isn't it? I
think it depends. I guess it also depends if you're looking at premium only or the MAU, but there's been different stats thrown around. I've seen others that are as high as 2, but the opportunity is 4 or more, right? Because that's kind of what the market is, and if anything, it's going to go up with the proliferation of devices and headphones, right? So
that's right. So if people are willing to pay, I don't know, between 8 and 20 cents per hour for Spotify Premium, I mean, just imagine. I mean, if you extrapolate the total value of the entire industry divided by the number of people and the hours they spend in just audio in general, it's, like I said, it's a fraction of pennies, and it's a fraction of a penny, and it's just. I like opportunities like that. I love situations like this where people sort of believe that it's over. The industry is what it is. It's just about streaming revenue, or it's just, it's kind of a forgotten. It's the last big forgotten area of consumer tech that hasn't really found its way. And the prize at the end is going to be just so big because it has been left for dead for so long. It's really exciting just to think about what the addressable market could be, and Spotify is the leader a leader, maybe the leader, depending on how you look at it. But I'd say for all of the DSPs, not just for Spotify, there's an enormous opportunity for YouTube and TikTok and different types of DSPs that have different roles in the broader ecosystem. It's a very interesting opportunity.
Right.
How many pictures can you look at in a day?
Then I'm very, very happy to discuss in the next episode the strategies Spotify is doing to enhance the ecosystem, strengthen the ecosystem, and unlock the code of success for audio creators and the audio category at all. And I want to thank you very much for your time and for coming on for this discussion. And I'm happy to record the next part very soon. Thank you to both of you.
Thank you for having us, Tillman.
This was fun. Thank you, Tillman.
Bye-bye to the audience. We are looking forward to having you again for the second part.
Thank you.
Bye-bye.
Bye.
As in every video, also here is the disclaimer. You can find the link to the disclaimer below in the show notes. The disclaimer says, always do your own work. What we're doing here is no recommendation and no advice. So please always do your own work. Thank you very much.